morning. You're watching The Market right here, Nifty now with me, Asha Faridi. I've got Nikunj Dalmia as well joining in on the show. And whatever could go wrong has gone wrong over from Friday up until this morning, Nikunj, literally.
Yeah, now the rescue process has started.
Yeah.
So frankly, if we get into what went wrong on Friday and what happened and why and what led to the collapse of SVP, I think that's passé. What is important here is that the US administration has stepped in. They're trying to contain or they're trying to do whatever it takes kind of a strategy to stem the systemic risk. So it's more like a bailout, it's more like a backstop which will protect first, very important, the depositors, and B, the institutions they have taken loan from SVP, they will be given a guarantee line and their loans in a sense would be honored. This is the fallout of high interest rate regime and this is the fallout of mismanagement of asset liability mismatch. I guess the point which markets are worried about, does it stop here? If does not stop here, could we see a snowball effect? That's one. B, unfortunately, just when it appeared that things were looking better and stable and calm for our markets, this news on a global front will act as a catalyst to trigger the market slide. And that I think is something which we'll have to unfortunately deal with.
Well, yeah, just in case you're worrying or rather wondering what really went by from the weekend up until now, Silicon Valley Bank, SVB, all that talk in the town about this bank has collapsed. Global markets clearly have seen a sell-off because of that. And the Dow on Friday itself was down a solid 345 odd points. Not just that, European markets as well have seen quite a bit of fall. They too were down about 1.5% or so. Remember, while we were trading on Friday itself, they opened quite sharply lower, and that's really been the case. In fact, a lot of global voices as well have come in and talked about SVB and the kind of contagion impact that it could have. And, the key amongst them has been Treasury Secretary Janet Yellen, who said just yesterday that the US government will not bail out SVB. Very categorical steps coming in there. FIIs for our markets, they've been net sellers, and it was no different on Friday as well. In fact, it was the largest quantum, that to the tune of about 2,061 crore rupees. And remember, on Friday itself, the Nifty closed below its 200 DMA of 17,427. So the US government has indeed stepped in. They were the 16th largest lender in the US biggest bank failure since Washington Mutual. The US Fed is going to be holding an emergency meeting as well as of today to perhaps try and measure if at all SVB could have a contagion impact or no. Although Janet Yellen has made it very categorical that the US government is not going to be bailing out SVB. Of course, Elon Musk has evinced interest and he says that he's willing to buy SVB.
It's not going to happen.
That's Twitter talk.
Yeah, that's not going to happen. But no, I mean, the point what we just discussed, it was the 16th largest lender, and when interest rates go higher, there will be casualty if you don't do your asset liability mismatch. What is important here is the government action. It's not a bailout. Government, US administration has gone out and said, look, we'll safeguard the depositors. We'll ensure that if there is the loan given to the current institution by this institution to individuals and to companies would be protected at least for next 1 year. And see, they've also shut down one more bank, Signature Bank, because it will have a problem in terms of a systemic risk because they've been lending a lot to the crypto. So what is happening in the market? I mean, that's more important. Cryptocurrency and especially Bitcoin has bounced back. B, SGX is off from the day's low. Second, Asian markets are not exactly, getting smashed here and there. So the selling in the market, I think, or the market mood is very measured. Actually, SGX is in the green. That is one part of the story that unlike what we saw, Hong Kong is also trading with a positive bias. Japan.
But I think, Nikunj, the bigger point is whether or not this is going to have a contagion impact on banks. sentiment-wise. I mean, in the US itself, we've seen last week JP Morgan falling 7%, Wells Fargo was down 12%, BofA was down 11%, and similar was the price action on a First Republic, a PacWest, or for that matter, Citigroup as well, which fell 8%. For our markets as well, the sentiment is brittle. Yes, the SGX Nifty is indicating a mildly positive start right now and a stable one at that, but sentiment-wise, when the markets across the globe are all that brittle, we've seen a slide come in for banking names even back home.
Yeah, so let's talk about first India.
Yeah.
Just when it appears that Indian markets will not see any kind of a wrinkle, nothing will happen globally, you are dealing with one issue after the another issue. Market just got settled a week ago when Rajiv Jain's fund stepped in to rescue Adani Group of stocks. Then this news comes in. Before that, you had this mass selling which was happening in by foreign institutional investors, and that also stemmed. The problem with this market, Aisha, is just that when it appears that okay, the worst is behind us, things now will look up, globally things will settle down, the impact of inflation, impact of Ukraine, impact of Adani, the domino effect, what it has created, markets have digested that. They have to deal with another, another news. Now, what has Friday's price action done? Friday's price action has decisively put the market back into the grip of the bear. So I think this Monday morning, even though there is not abundant red on the screen and there is no panic per se, it is advantage bears. The technical positioning of the market, the mood point of the market, the levels at which you got pushed back, the bears now can really, can smell that
there's an opportunity.
There's an opportunity for them, and that is the problem, because this market up until now has managed to bear the storm. Whether it was Adani, whether it was FI selling or something on the inflation front. Now, if the markets are going back to the lower end of the technicals, desire to trade long is just not there. The mood is just not supportive. Everybody is in wait and watch mode. So the collateral damage may not be that high, but the triggers are just not there, which will generate upside momentum. Markets in the short term is sentiment and confidence. And when they both are not on your side, it's impossible to make a case for bounce back. So bulls will find it difficult to engineer a rally. Let me put it this way.
Yeah, that clearly seems to be the case. And FIIs were net buyers, or rather during the week. But I think Friday's big knee jerk and the big sell figure that we had in excess of 2,000 odd crore rupees, that's going to definitely step us back a little bit. The Indian rupee as well saw small depreciation as opposed to what the US dollar did. Of course, the key is going to be what the US CPI data is going to be this week, and more importantly, what the Fed commentary is around SVB and perhaps the possible systemic risk that it could have to the US banking system. Japan has been the best performer, China the top loser in the week gone by, and the Nifty fell about 1% on a net basis. Mid-rung performance is what you saw from the Indian equity markets. But you know what? The big topical discussion is SVB and whether or not it could have a contagion impact. So let's assess that with Jeff Dennis. He joins in on the show right now. Jeff, hi, good evening to you and good morning from all the viewers here in India. Jeff, just wanted to assess whether or not there could be a contagion risk of the SVB fallout and what happens next, because Janet Yellen has been pretty categorical saying that the US government is not going to bail out SVB. So what happens then?
Well, I think the Fed's actions today make the risk of contagion much reduced. I think if we'd had no news over the weekend, the contagion risk would have been much higher. Now, clearly what they're doing is backstopping all the deposits, all the depositors as well, including those with large deposits. And therefore, I think the risk of there being a bank run elsewhere, because people are concerned that, they could lose their money if the SVP depositors lose their money, that has been now substantially reduced. So I think the contagion risk is much reduced. Now, having said all of that, there are a lot of uncertainties about all of this, how this is going to be paid for, this backstopping of deposits. They're talking about a levy on the banking system. What does that actually mean? And of course, it does still point towards the question of, are there other banks that are in a similar situation to SVB who could get into trouble over the next few weeks? Now, if you allow me just to say this as well, SVB looks like a bit of a special case. It was a major lender, as we all know, to the technology sector. as those companies have shed labor and have really started to downsize significantly, the demand for credit has gone down. So the bank, SVB, has not been lending as much money to these companies. So they put a lot of money into the fixed income market, where there've been a lot of losses, of course, in recent months. And apparently they didn't do a lot of hedging. So it looks like a special case. And what the Fed has done today is very positive, I think, for the long-term outcome here. And also bear in mind, finally, in response to your question here, that the general capital situation of the major banks in the US is far better than it was in 2008, at the time of the global financial crisis.
Mr. Dennis, what are the chances that, given what is happening to the US financial market, the Fed actually may be forced to consider a rate hike? The narrative changes. It may be a forced narrative, it may be a compulsive narrative, but the last thing you want to do is that increase interest rates again, which could have an impact on ALM mismatch further.
I think as you look at all the factors that would impact the next FOMC meeting and the policy decision that's taken there, this at the margin makes an aggressive rate hike at the next meeting less likely, because they're now seeing, the Fed and the world is seeing, the fragilities that could be being caused. And there may be other examples out there that we don't know about. And of course, Signature Bank also basically closed and was intervened over the weekend as well, and East Coast Bank. All of these, the banking sector risks will make the Fed a little bit more cautious. So my view at the margin here is that it makes it much more likely you'll get a 25 basis point increase later this month, not a 50 basis point increase. And this is, I think, one reason why, plus the actual action the Fed has taken over the weekend to backstop these depositors, and therefore to try to eliminate or at least reduce the risk of contagion. This is why equities are snapping back. And so this situation, the Fed's response and the view that perhaps they will only move rates by 25 basis points, and maybe the peak in rates now is lower than it might otherwise have been, is good for equities. It's probably bad for bonds after you've got a gigantic rally in bonds on Friday. And it's also negative for the dollar. Dollar had a big rally. Flight to quality in bonds, flight to quality in the dollar on Friday. That's also unwinding. So this, there are more risks out there, but about other banks being in the same situation. But the Fed's rapid response to this, even though there's a little bit of stuff around the edges that we don't quite know, I do think is going to be something that will lead to a very positive reaction by the equity markets, everything else held constant.
Right. Jeff, great to have you on the show. The good news this morning is, and I'm going to skip Bitcoin here, but the marked recovery that you're seeing in the US futures, they're scaling up almost 400 points higher, pretty much undoing all of Friday's losses. And so is the SGX Nifty, by the way. It's indicating a flat start. There are other markets in Asia as well, like Japan, for instance, which is actually holding up in the green. So it seems like all that damage from SVB could very well be behind us. Of course, where we take it from there is anyone's guess. But a lot of other talking points as well in today's trading session, and that much awaited corporate rejig has finally happened. There's a change of guard at both Unilever as well as Tech Mahindra, and IndusInd MD and CEO has also been reappointed. So let's take it one by one. Let's start off with Tech Mahindra first, considering this was much in the running. And Mohit Joshi has been appointed as the MD and CEO for 5 years now. The appointment is going to be effective from December this year, wherein Joshi is going to replace CP Gurnani, who will be retiring in the month of December. Now, he's, of course, an ex-president and head of the several verticals at Infosys. So in that sense, an Infi old hand comes to Tech Mahindra. And, of course, there is that rejig coming in on Unilever as well. And IndusInd Bank MD gets reappointed for the next, I think, 3 years now.
Tech Mahindra has been in talks, so to speak. Why? Because everybody knew that Mr. Gurnani is retiring. And markets were anticipating that a heavyweight from the industry is going to be now, could be the CEO of Tech Mahindra going forward. So I think markets will be excited with Mr. Joshi's appointment as the new CEO and managing director of Tech Mahindra for 5 years. Tech Mahindra has two basic challenges if I compare them with industry average. The BFSI vertical traditionally has not fired full cylinders, and their numbers in the BFSI vertical are way lower than what the industry average is, despite being a tech company or despite being a tech stroke or Mahindra company. The margins are at the lowest end of the barrel. If you compare the margins, it's nowhere close to even to HCL Tech. So there are two options here. Can Mr. Joshi come and reboot the entire Tech Mahindra culture, business cycle? And if he's able to do that, given the brand name they have, given the positioning they have, could Tech Mahindra be the big turnaround story of 2023 and 2024 and beyond that? The past experience has revealed that there have been success stories and there have been failure stories. If one looks at the Vishal Sikka migration for Infosys, it did not work in the first draw, but Salil Parekh, as the CEO of Infosys, has worked like a charm. Similarly, the change of guard at Wipro, initially it worked for Wipro, but the change of guard now is not having a clear impact in terms of the positioning. But the clear success story is what happened to LTTIS and LTTS, where the change of guard has really changed the way how business does. So the man who runs the business matters in this kind of a business, because A, there is understanding, and B, you bring a lot of relationships on the table. Always this classic example to everybody. When Mr. Ramadurai was running TCS and then Chandra took over, the business of TCS completely transformed. Can Mohit do that to Tech Mahindra? There is a strong case for it, and there is a need for it. And now with him coming over, expectation is going to be very high for Tech Mahindra as a stock.
Oh yeah, absolutely. And I was just looking at the 1 month price action on Tech Mahindra. It's done pretty okay actually. Not the last 6 months, but in the last 1 month, as the news of a replacement for CP Gurnani came about and the chatter really picked up, you have seen a bit of an outperformance for Tech Mahindra. But what about the market, considering the Nifty broke its 200 DMA on Friday? This morning, of course, the SGX Nifty as well as the US futures are indicating a rebound. Let me take it across to our technicals, our chartists, and figure out what the technicals are indicating. Naresh, Kunal, hi, good morning. Naresh, what's it looking like? Playing for a catch-up or a rebound today?
So in terms of the index, I would still wait out because we are getting into that zone back to the retesting of 17,300 to 400. And the range continues to remain 17,300 on the downside, 17,800, 900 not able to cross. So in terms of index, would not expect much of a bounce back as quickly, but stock specific moves could continue. So you would expect the range to continue. For say for the day, we could be in a say plus minus 50-point range for now.
Right. Kunal, where does it go from here? I mean, all the weekend we've only heard SVB, SVB, SVB. What next? And purely, I think, more importantly for the Nifty Bank, what kind of movement do you expect there?
But then, I think if given the kind of news flow which has been surrounded, and if you are down some 30-40 points only on the SGX Nifty, I would take that as, the markets being very strong as well as factoring into most of the negatives. Now, one of the only positive data points which you saw on Friday was there was a very good amount of put writing which happened for the Bank Nifty at the 40,500 strike. Now, intraday, we fell below the 40,500 mark. I think we also fell below the 40,400 levels on the Bank Nifty. But that put writing stance from the option traders indicates that they're expecting that at least by this week, for this week expiry, which is till Thursday, they're not expecting the Bank Nifty to fluctuate significantly below the 40,500 mark. So, like the 100 points, 200 point dips below those 40,500 level should be taken as a good buying opportunity.
So Kunal, it appeared on Friday that the market were back in the bear grip, so to speak. So now there's no point in going short, right?
Yeah, no point in going short as of now. I mean, if you're a very short-term trader, then I think it doesn't make sense to go short. See, we also discussed the point on Friday, Nikunj, that 17,000, that 200, 300 level has been tested 3 times in last 1.5 odd month. And on the budget day, on the, I think a couple of weeks post that, we've not been broken that, support. So that's the only point of confirmation which I think a bear should be waiting for.
Okay.
It's a smart recovery, Asha. SGX, Asia, Bitcoin, US futures. So unlike what we, let's say, thought will happen on Monday morning, it's a lot of green. I mean, it was always expected that US administration will come and bail the banks out. It's more like a bailout. If you frankly ask me, you may not want to use the word bailout per se, because bailout has not been given to the shareholders, it's been given to the depositors. And that's the right spirit, because when a bank goes down, you have to protect the depositors first, and then you figure out what happens to the shareholders. And even in India also, none of the banks have been allowed to fail. You look at the case of Yes Bank, which had a huge asset liability mismatch. It was not allowed to fail. I mean, banks came together and they rescued them. You look at case of even Bombay Mercantile Bank or small, you got these PVB banks, the smaller banks here. They've had challenges, but they were eventually given a bailout. So nobody wants banks to go under at least the depositors' money. So I don't think that's a surprise there. Where I'm surprised is the rally which is coming back in risk asset classes, whether it is Bitcoin or whether it is Dow futures or what is happening even to the US 10-year paper.
Right. Okay. So, on that note, let's get in some stock ideas going as well. Naresh, would you have a positive bias? Are they all buy calls this morning?
Yes, so all buy calls in the defensive sector. So the first is a buy on power grid. The stock has continued to show good momentum relative to the markets, not very far away from an all-time high based adjusted for dividends. Good momentum here, expecting it to cross into new all-time high. Stop loss at 220 and a target price of 250. The whole power sector looks interesting, whether it is power grid or NTPC in the whole basket. Same with the next stock is a buy on IEX, Indian Energy Exchange. The stock has corrected almost 50% from the top, and from there it has started making a recovery. A good base made around 125, 130. For the last few months, the recent swing highs are around 150, 152. A break above that would confirm a bottom is in place and a new trend is starting. So preempting that move, good momentum in the last few sessions. A stop loss at 144 and a target price of 170.
Kunal, all buy calls from you as well, or is there some sell in there?
No, buy calls, but then the stock-specific ideas which I'm picking up is a bit of mix of defensives. So the first one is actually a buy on Gale. The stock looked quite strong even on Friday's trading session, closing very, or rather coming very close towards its all-time high of 52-week high levels of 111 plus mark for Gale. So that's a buy, targets of 118, stop loss to be kept at 107.5. And Cipla is the stock which I'm betting on from a contra space. I'm expecting the stock to get into a strong bottom formation. A lot of indicators have come back into a deep oversold territory. So expecting a very strong bounce for Cipla. My earlier targets were closer to 900, revising that to 940. Stop loss remains the same at 860.
Okay, since it's all a buy list coming in and defensive tilt at that. In fact, here's another defensive stock, Nestle. That is Saurabh Mukherjee from Marcellus Investments' key idea or top idea. Let's hear out why is it that he's recommending Nestle.
Investigated by management. So this is a company with very high cash conversion. So operating cash flows typically higher than operating profits. There's no debt on the balance sheet. This is a high margin company. If members of management, distinct from the promoter, members of management are doing anything naughty, I'm sure the Deloitte investigation will pick it up, and we as shareholders will be very happy because then the operating margins will go up further. This is already a very profitable company with 200, 300 crores of cash on the balance sheet. If somebody has been naughty in the management team and has done naughty stuff in terms of pilfering from the company, then we would, as shareholders, be delighted if those people are caught and the margins rise even further. So I'm not particularly perturbed about the whistleblower thing. I'm very happy with the management. The board has hired Deloitte to investigate the matter. Divi's Labs. So we don't think Divi's Labs earnings performance has at all been disappointing. They were obviously a big beneficiary of Molnupiravir and COVID. Merck gave them the entire Molnupiravir contract. And now that we're coming out of COVID, obviously the Molnupiravir revenues are not there. If you look at Divi's now versus the fourth quarter of FY20, the last pre-COVID quarter, the business is 30% bigger. So they've grown, excluding COVID, they've grown the business by a third through the COVID years. Our reading is, and consistently talk to the world's largest pharma companies, the innovator company's consistent view is this is now the go-to company in the world. Amongst the world's top 5 API manufacturers, Divi's is a top 5 API manufacturer globally, the only Indian company to be on that list. The consistent view from the global innovator pharma companies is this is our go-to firm for more API contracts and more custom synthesis contracts. So we've doubled the position in Divi's Lab gradually over the last 12 months as the shares have halved. And we remain very optimistic that we'll make lots of money here.
Back back with the market right here on ET Now, and the big news is that you've seen quite a bit of recovery both for the Dow as well as Asian markets and the SGX Nifty as well. So that really is the big takeaway. And in case you're wondering why the sentiment has changed so dramatically from Saturday to now, the US government has now stepped in to protect SVB bank depositors. The Treasury, the Fed and the FDIC have put out a joint statement with measures to protect depositors in Silicon Valley Bank. Now, the actions are going to protect all depositors is what their statement reads. The protection is going to be for deposits in excess of FDIC's usual $250,000 limit. The measures, of course, are aimed at strengthening the public confidence within the banking system. How it's going to work is that liquidity is going to be offered to depository institutions via a new Fed funding program, which is going to be called Bank Term Funding Program. The impact, of course, is what you can see on your screens. The S&P Mini has already shot up about 1%. The Dow futures are higher, as I can see on my screens right now. They're scaling up quite nicely as we speak. In fact, let's just bring up what the futures are currently scaling up at, because the US futures, the last time I checked, was scaling higher by, I think, 400 to 600 odd points. And of course, Asia as well. Most markets like Korea have jumped back into the green or flattened out actually. Hong Kong is holding up over 300 points, and China as well is seeing a strong recovery of about almost 0.5%. So is the SGX Nifty. But news coming in on a bank back home, although the lock-in window opens for Yes Bank shareholders, but the bank is not officially out of the reconstruction scheme. In fact, ET Now has learned that Yes Bank has to take the approval from the RBI that it has met all the conditions needed to come out of the scheme. Ankur Mishra, my colleague, joins in with exclusive details on the same. Ankur?
Yes Bank will reach out to Reserve Bank of India for officially being out of reconstruction scheme. Remember, 3 years back, Reserve Bank of India has created a reconstruction scheme to bail out Yes Bank, and one of the conditions for that was the lock-in period of shareholders of 75%. Now that lock-in period has ended officially as per confirmation from CDSL and NSDL. However, the official confirmation of coming out of reconstruction framework will only come from Reserve Bank of India, and for that the bank will reach out, the custodians of the bank will reach out to the Reserve Bank of India for coming out of reconstruction scheme. Remember, after the lock-in period has ended, there were speculations that many of the shareholders may look to pare their stake in Yes Bank. However, the sources which we have reached out to, including State Bank of India, says that this will happen in phases, and for now, State Bank of India, which holds around 26.14% stake in the bank, may remain a majority shareholder for now, and the call will be taken later. However, due to the deal with Advent and Carlyle, the stake of State Bank of India will come down from 26.14% to 24%.
Okay, Ankur, we'll leave it at that. Yes Bank, of course, is going to be another stock which is going to be in focus. And by the way, Natu from RRR has won the Oscar for the best original song. Well, in any case, all the hype around the movie and the song, one would have thought that this was, in any case, a strong contender. And now it's won the Oscar for the best original song. Kunal, you've seen the movie, right?
Yeah,
You're perhaps the only one in the studio who has.
I've not seen it. I've not seen it. You heard the song?
Yeah, I've seen the song.
And did you dance on a song? On one of the shadis?
Not really.
I've seen the song, not danced in it, but yet to watch the movie. Maybe now I will.
Yeah, maybe something over the weekend. Yeah, but it's incredible feat, isn't it? I mean, whether it is a recognition in terms of getting on a global platform or winning an acknowledgement for best song. I mean, this is a very unique acknowledgement. It's a very unique acknowledgement, at least for the Indian film stroke the entire movie industry. So next song.
You know, apart from Mother India, only 2 Indian films have even been nominated for the Oscar.
One was Lagan.
Salam Bombay, Lagan. Yeah.
So it's
That's
a feat in itself. It's honestly a feat in itself. So that's big news. Something to really feel happy and literally in this case really to cheer about. And I've been told that Pankaj is the other person who's watched the movie and heard the song.
Won an Oscar. I was like, when did that happen?
He's heard the song, he's seen the movie. Right, Pankaj?
Right, Nikunj, I have watched the movie. I'm a movie buff, so yes, I have watched the movie on OTT.
And have you heard the song? कोई शादी में डांस करा है song पे इस पे?
Sorry, Nikunj, I could not hear you.
No, have you heard the song? शादी में डांस करा है बारात में कहीं पे?
हाँ, बहुत.
Okay, let's shift to banks then. Tell us what Macquarie is saying about them.
Right, so Macquarie has come out with a report, Aisha, and that's about the banking sector. Now, the interesting bit about this is that really, how they are looking forward to as the credit cost, and they are saying that low credit cost will drive ROAs to a multi-year high for the banking space, and that's why the EPS upgrade cycle, which probably according to them started about 3-6 months back, is something which they believe will continue. They have raised their EPS by about 3 to 9%. This is FY23 to FY25, and that has propelled them to increase target prices across various banks. However, their top two picks are HDFC Bank and IndusInd Bank, but they believe that overall, banking space continues to be in a sweet spot. What has seen the upgrade in terms of target price? Axis Bank, though they maintain their neutral, target price has upgraded quite significantly versus from where it was earlier, and now they expect 940 should be the fair value. We have seen ICICI Bank has increased, or rather Macquarie has increased their target price on ICICI Bank marginally to about 1145. Similar is the case with HDFC Bank, and for IndusInd Bank, they have gone ahead and increased their target price. Apart from that, names like Kotak, some others, is something where they have marginally tweaked their prices, but their top pick is HDFC Bank. IndusInd saying that overall, they believe that the sweet spot that banks is will continue, despite people believing that NIMs may come down, YOY, overall changes may particularly not be as high as what they have been in the past, but they believe incremental numbers or return ratios from here on will improve.
Okay. Right, Pankaj. Thanks a lot for that. Let's hear out Neeraj Diwan and why he's bullish on Kirloskar Brothers.
The company I want to recommend today is Kirloskar Brothers, which is a world-class pump manufacturing company with expertise in fluid management systems, which include pumps, valves, and turbo and hydro turbines. The company is benefiting so much expenditure which is going into infrastructure projects for water, power projects, oil and gas, irrigation, and marine and defense. And the kind of focus which the government has for rural infrastructure and urban cities, smart city projects is also helping the company. The company has been reducing the exposure on EPC business, which was a low margin business. And the exposure now only stands at 6%. So we believe that the company, which is also leveraging its international operations, will show a good growth going ahead. International business has also seen a good improvement in the order book. So we expect the company to grow its top line by 13% over 22 to 24 and increase their EBITDA margin by almost 300 basis points. So valuing this company at just 10 times EV/EBITDA 1 year forward, we get a target of 500, which is an upside of 25% from these levels.
Reserve Bank of India has also given an extension to the managing director and CEO of IndusInd Bank, Mr. Katpalia. But Samit, interestingly, instead of a 3-year extension, it is a 2-year extension.
Well, yes, that is the main concern on the street, that the bank had asked for a 3-year extension, but RBI has given only a 2-year extension. Now, RBI typically grants renewals for 1 to 3 years, and now 2 years hence is very unprecedented in this case. And even in February, that is recently, the management had indicated that they are confident of getting a 3-year extension from RBI. Now, the bank has already appointed a deputy CEO, and according to various analysts, a 2-year time is enough for transition or grooming if required, but it is not enough to implement long-term strategies for the bank. Moreover, Katpalia has been reiterating that one of his key target is to create a fourth domain expertise through an acquisition, and 2 years is not enough for mergers and acquisition transaction to take place. Now, there have been in past also there have been some instances where a 2-year renewable was given. Now, in case of DCB Bank, Murli was granted a 2-year approval in April 2022, but that was because he was completing his 15-year time period, and that is the maximum tenure allowed by RBI. And in case of Sanjay Bakshi also, he was given a 2-year extension in 2021 for ICICI Bank. However, there are some positives, and that is the fact that after this 2-year, Katpalia would be again eligible for another 3-year term. And earlier also we have seen RBI giving such approvals. In case of Federal Bank, they gave a 1-year extension twice before giving a full year term of 3 years. Then in case of DCB Bank, they had given 1-year extension twice, then gave a 2-year term. In CSB Bank, they gave 3 months interim extension twice before giving a full 3-year term for the MD and CEO. Now, other than IndusInd Bank, what are the other banks that would remain in focus because of this renewable coming up in 2023? First, in April 2023, AU Small Finance Bank and City Union Bank. In July 2023, Equita Small Finance Bank and Karur Vasya Bank. In October 2023, it is HDFC Bank and ICICI Bank, and in December, it's Kotak Mahindra Bank. All these banks will be seeing a renewable coming up for their MD and CEO in 2023.
Sandeep, right, Swami, thanks a lot for that. Sandeep Sabharwal joins us. Sandeep, when we went home, you back from the pilgrimage, right?
Yeah, I came back. Yeah.
Good. On Friday, when we went home, the world was worried about the domino effect what SVB Bank could have on the world. But Monday morning, there is an indirect bailout for the depositors and a reassurance to the current borrowers that all is well. What do you think it means for financial markets?
Yes, so Nikunj, I think this bailout has happened the right way, and it had to happen, because otherwise, I think the domino effect would have been there. So effectively, they bailed out all the depositors, and they have said that all other depositors in all other banks also should consider their deposits as safe. So they are backstopping effectively all deposits in all banks, which is a positive. But they are not giving bailout to shareholders. So the management or the promoters who took high risk to create such a scenario, they lose all their equity. So this is the best way to go about it. So it's effectively not a bailout of the bank, but a bailout of the depositors in the bank who had effectively no fault. So I think it's a win-win, and that's always the right way to go about.
From an Indian market standpoint, which is what we need to address here, is this a no story now?
It's a no story, but I think what people need to recognize, which people don't, is that in the financial system, especially in financials, unlike in any other category of business where smaller companies come up and you can take higher risk betting on them, the low cost CASA deposits are the mainstay of banks, and the banks with a high CASA effective deposit franchise are the ones which should get higher valuations. Smaller banks are, for some reason, given higher valuations than larger banks, which is absolutely wrong. It should not happen. And to that extent, that valuation correction could happen in India going forward, where people realize that the larger banks are more stable and they have better bread and butter CASA low cost deposit, which helps them sustain. And the smaller banks, which rely on high cost deposits, etc., or even many of the PSU banks where people are so gung-ho on, you look at their held to maturity profile of government bonds, which was the big issue here, where those are not marked to market. They are very high. So those banks are actually riskier than the large private sector banks.
Okay. There is a mild recovery impressive one if I look at from the day's low, but mild in terms of the absolute change. But remember, on Friday, when we went home, there was a bit of an helter-skelter in the market. B, over the weekend, the news flow about SVB was very intimidating, that what will happen to the banks, the collateral damage it could have, and how it could roil this sentiment. So thankfully, there is a bit of a relief rally. Monster comeback in risk-on assets like Bitcoin, and a strong global setup which really could be very inviting for the bulls. So Sandeep, I look at the lay of the land. One problem after another problem has hit us in 2023. FI selling, fear on inflation, Adani sell-off, and now SVB bank and impact of it on global financial markets. But markets are still digesting all the bad news. Do you think now we could be getting ready for the leap forward? Because if you are not falling despite bad news, that just shows the inherent nature of the market.
Yeah, so the point is that if you looked at the commentary following the collapse of this bank, the way people became immediately negative, they compared it to Lehman, etc., without knowing what Lehman actually was and what that scenario of 2008 was vis-a-vis what it is today. So people are very fearful. And for some reason, I got so many comments that people said that there's going to be a recession in India because of the fall of this bank, which I just could not understand why. But that said, I think what this does is that this brings closer the likely monetary tightening cycle, because now accidents have started to happen because of higher rates. And higher rates will effectively have an impact on slowing economies and slowing inflation, but people have to have patience, because every month people see inflation, it's not coming down, and they think it will never come down. I think rates are high enough that it will have an impact. So I think the Indian economy is quite decently placed. I don't think there is any big issue with the Indian economy. We have underperformed reasonably, and I don't see any big downsides in the Indian markets. There'll obviously be volatility, but I don't see big downsides. And I think markets are ripe for buying the right kind of stocks.
If you just tuned in, well, the news is that global markets are bouncing back on the news that the US administration has stepped in and they've decided to bail out the SVB depositors. In the crisis like this, the first thing is you need to calm the market, stop the contagion from spreading through, and ensure that the depositors are being taken care of. In India also it's happened. Yes Bank, a classic example where the depositors were taken care of despite the asset liability mismatch and despite large NPAs which had happened on the balance sheet of Yes Bank because of bad loans. But the depositors were taken care of. That's Yes Bank for you. We'll talk about it some other time, but the mood point I think is strikingly different. So Kunal, what will you do now? We were discussing what we discussed on Friday and in the morning. 17,300 looks like will act as another support point. This is for the third time.
Yes.
Nifty will bounce back from 17,300 in a matter of 3 months.
Correct.
So एक मजबूत दीवार बन रही है.
Correct.
Right. So can I say that now you have to play for the bounce?
Yeah, I think it's a good strategy to play for the bounce. It's a good strategy where the risk reward is in your favor. The only point of concern for the markets is that which sectors and which stocks would lead or get into a strong bounce, because at every bounce, every recovery, the narrative for sectors as well as stocks have changed. Whether it's from the post-budget themes where you've seen few of the sectors like the IT stocks made a good comeback first in the first half. In the second bounce from that 17,300 mark, the IT stocks actually underperformed. So that narrative is changing with every bounce. So I think that's the only confirmation point which a short-term trader could probably be waiting out for. But yes, I think in terms of a level, the fact that we've managed to absorb three very strong news flow, not broken below this level of 17,300, gives it a very strong case that above this level of 17,300, bulls should make a strong comeback.
Looking at steel prices are at 8-month high. And Sandeep, this is quite ironical, right? There is a fear of a slowdown. there is a yes and no there is yes and no in the European economies, but steel prices and copper prices are at a multi-month high.
Yeah, so they bounced back from extremely oversold levels. So they got sold out so much after the export ban was imposed, and then all the Chinese shutdowns, etc. So now they have come back to reasonable levels. So I think it's good for consumers, producers, both. The probability of any significant rise from here, in my view, is extremely low given the dynamics of the global economy. And to that extent, I would think that we are more near the peak of the current cycle in terms of steel prices rather than there being any significant upside from there.
Is Nuresh back? Can I connect with him? Okay. Nuresh, the Jindal names, JSPL, Jindal Stainless, JSW Steel, all of them have done exceptionally well, even though they are part of a commodity pack, so to speak. Jindal Stainless in last 1 month is up 21%. Flip it around with JSW Steel. We don't talk about it. We tend to think steel means SAIL and Tata Steel. No. Jindal Stainless, a specialized steel company, 21% higher. JSW Steel, JSPL, some of these stocks actually have done rather well. So while we are talking about lion part of our market share has gone in trying to talk about what is happening to Adani group of stocks and banking stocks and Zomatos and the Paytms of the world. There's a nice little rally which has come in some of the individual stocks like Jindal Stainless. Naresh, what do you like from the steel space?
So if you look at Jindal Steel, it has been an outperformer. But if you go ahead also, even in the small cap names, there is a Kirloskar Ferrous which is at an all-time high. You are seeing something like a Vardhaman Specialty Steel also at a 52-week high. Sunflag Iron is at a 52-week high. So it's basically all value-added special steel are doing really well. So even a stock like Usha Martin is at an all-time high. So what we are seeing is clearly the whole pack, which goes from steel to value-added steel. The whole sector is doing well. I can pick up one more now, Bharat Ventures, which is closer to a 52-week high. Jindal Stainless and Jindal Stainless SR, which will both now be a company together after the merger, were the lead, torchbearers of this move. But we are seeing this trend across the whole small cap, mid cap steel names. So there is still a lot of opportunity in those small cap, mid cap steel names. And in the larger cap steel names, I would expect Jindal Steel to be an outperformer because that's a stock which went from 600 to 300 and now back to 600. And that sort of a recovery generally indicates the leader in the sector is set. So going forward, Jindal Steel would be the large cap bet. And in small caps, one could actually create a basket. So a lot of these companies are doing really well. The trends are pretty strong. And they've been silent movers. So for example, Kirloskar Ferrous after that September Kirloskar Group meeting from 250, 300, the stock has gone to 450. So I think there's a lot of space. We are seeing even a small cap, old name like Mukan Limited, seeing a lot of promoter buying as well as a lot of action going on. The stock is recovering. So one can pick their choices, but the whole small cap steel basket looks pretty interesting.
Okay. Let's hear out some more ideas, and this time it's from Sanjeev Basil.
I continue to see Bosch has hit new highs. By the way, 22,000 is coming. You can add a Motherson Sumi on the OEMs. And I think Eicher and Maruti will lead from the front. Bajaj is a very, very big outperformer along with Mahindra. But I think some of the OEMs can outperform from here. Two more of my picks, if you remember, for New Year were Canfin Home, which again was an outperformer, and Tech Mahindra, which I think can be a dark horse in the large cap IT basket. So auto, IT, metals, banks, the whole basket is looking very, very good for the upside.
Sandeep, the other story is there is a change of guard at Tech Mahindra, and it's Mohit Joshi from Infosys. Strong track record, understands the linearity of the BFSI space, now is going to be at the helm. What does this mean for Tech Mahindra?
So overall, it's a positive move because people were expecting a change and someone strong to take over for a long time, and it's happened now. So I think it removes the uncertainty around Tech Mahindra, and the stock is not as expensive as the larger technology names. So I think it will be taken positively. Overall, tech industry, I'm not so positive still because I think the impact of slowdown on business will still be seen. But Tech Mahindra should be an outperformer.
By Tech Mahindra, I mean, it's got low margins, it's got low market share, low BFSI spread. If Mohit Joshi is able to turn things around, this could be a great comeback, pretty much what Infosys did when Salil Parekh took over from Vishal Sikka. Sandeep?
Yeah, it's possible. So I think it depends on how the turnaround, turnaround in the sense that Tech Mahindra is not that it's been doing badly. It's just that maybe it can grow faster than what it has been, and to that extent, that could play out. And that's for sure. So that's why I said it can outperform, but overall, the overall growth outlook for technology stocks for the next few quarters still looks murky to me.
Paytm as well is going to be the other stock in focus. The average monthly transaction users have come in higher by 28% on a year-on-year basis. Their merchant paying subscription for payment devices also has now reached 6.4 million. And the GMV for quarter to date, that's shown an uptick of about 41%. But again, these are all year-on-year numbers. Kunal, betting on Paytm or still sticking with PB Fintech, or none at all given the kind of market move?
I think PB Fintech still looks very strong to me on charts. I think that's a stock which has recovered, managed to get into a correction. I think the correction was also more than 10% for PB Fintech. And from there, the stock has made a fresh high again. I think hit that 600 mark a few trading sessions back, and now it's still consolidating at the 600 levels. So slowly and steadily, the stock is migrating towards a higher level. And with every breakout, the stock also takes a pause in between, goes into a mild correction, and then makes a strong comeback. That's, I think, a classical sign for PB Fintech. The monthly charts have been looking very, very attractive. So even though the recovery is just about 2 months, 3 months for PB Fintech, but the impact of that has happened quite strongly on the monthly chart. So I would be bullish on that stock. Paytm is still a bit of an on and off because the trends have not yet stabilized for Paytm. That's the only concern with a stock price movement. So, I think last month or so, the stock had rallied up towards 650, 660 levels, then corrected sharply, I think back below that 600 mark. So it's still trying to settle into that range around that 600 level. So we'll wait out for a point where, keeping a buffer of maybe 30, 40 points above the previous highs. So if the stock crosses that 700 mark, that could probably become a good buy zone for Paytm.
Right. A couple of other stocks which are going to be in focus, and how can we not talk about the Adani Group considering they fully prepaid the $2.5 billion share buyback financing ahead of their deadline. So that's the Adani Group. After Rajiv Jain literally bailing them out, this is definitely very, very positive news. Let's see, given the kind of market construct that we're currently in, whether or not these stocks surface up even further. There's, of course, Ambuja Cement as well, wherein the promoter has prepaid now that $500 million facility taken for companies' acquisition financing. So that's another stock in focus. There's Godrej Properties, which has acquired a land parcel of almost about 28 acres in Bangalore. That's going to be another stock. And then Sona BLW as well, wherein reports seem to be indicating that Blackstone is now looking at offloading and selling its entire 20.5% stake in the company via block deal. That is what sources seem to be indicating. So that's going to be another stock which is going to be in focus. And I think with that, it's going to get back to its 52-week lows, considering this is coming at a huge discount to Friday's issue price as well. So these are a couple of stocks which are going to be in focus. But Sandeep, just wanted to get in your sense, whether in the recent decline in the markets, you've been a buyer at all or busy protecting capital?
Yes, so we have been buying only because I don't see any huge downsides. So I think if this entire thing had spilled over, then obviously that strategy would not have worked. But overall, given looking at the Indian equity markets, the overall valuation correction that's happened, and the growth paradigm that exists, so I would think that we are reasonably well placed.
Right.
SGX is trading with a positive bias. Dow futures are trading with a positive bias. In case you've just tuned in and you just hello and good morning, but it's indeed going to be a decent morning. The fear at least that the contagion effect of SVB bank will have on global markets, Asian markets, Indian banking system, Indian startup space, all of them so far have been put to rest. One. Second, Bitcoin is making a comeback. So unlike 2008 where the balance sheet comparisons, if they have been done, I think that's naive. But the balance sheets and the setup and the leverage and the total asset liability mismatch in the books of US financial banks is not that high. Yes, you may see more controls coming in for US small and regional banks now, but the broader message, I guess, is very clear. The US administration has stepped in. They've stepped in to protect the depositors and to make sure that there is no contagion, so to speak, of this fallout in global financial markets. Dow futures up 1%, S&P futures up almost 2%, Nasdaq futures up about 2%. Sandeep, when there is an asset liability mismatch in the system, it's a function of interest rates going high too fast and too quickly. I'm just thinking aloud that could this really force the Fed now not to increase rates that aggressively? And if they don't increase the rates that aggressively, in the short term, that's a big relief for asset prices.
Because there are two things. One, they have already increased rates quite rapidly, and so have many other central banks. So the impact of that always comes with a lag. And in my view, over the next few months, we'll see the impact of that on inflation. And inflation should fall across the board, across countries. So that's one thing. So so the data always tends to be backward looking, whatever the retail inflation data, etc. comes in. Secondly, the probability that aggressive hikes will continue obviously reduces, because given the fact that this could lead to slowdown, uncertainty in hiring by many of the companies, etc., and create the situation which they always wanted of increasing the overall unemployment rate, which tends to control inflation in the developed countries. So I think although all that is playing out, so the probability that rate hikes will reduce is very high. Whether they will, if at all, increase rates or not in the next meeting, it's very tough for us to say.
Nazara Technologies as well, and in clarification yesterday, they've stated that two of their subsidiaries hold cash balances at Silicon Valley Bank, that's SVB. So it's a little bit in the lurch. Well, yes, the government is going to be bailing out the depositors. I don't know what happens to these two of their subsidiaries which hold cash balances at SVB. That's Nazara Technologies in trade for you. That, of course, is the pre-open rate. This Mahindra CIE as well. M&M is looking to sell about 4.6% stake in the company via a block deal. As we understand, about 355 rupees per share is set to be the floor price. At least that is what reports seem to be indicating. And I think that block has already happened. The stock is sharply lower by 6.25% as we speak right now. Let's see whether the block on Sona Comstar as well, or Sona BLW as well, has taken place or not, because reports were indicating that Blackstone is looking to sell their entire 20.5% stake in the company via block deal. Almost 3% lower is where Sona Comstar is currently in trade. Kunal, within the Adani group of names, while you categorically said that it is an avoid, you also said that Adani Enterprises and Ports are the ones which look tradable. Is Ambuja as well part of the list?
Yeah, Ambuja, Adani Ports are the ones which are tradable. By tradable, I mean they are at least less volatile as compared to the rest of the pack. They don't get into strong bouts of circuits up, circuits down. So that's the point of stability for the stock prices. And the other way to look out for is the high amount of volatility intraday as well. And these stocks, apparently Adani Ports and Ambuja Cements, have been having lesser degree of volatility as compared to the rest of the pack. Now, but the data over the last couple of days also indicates that Adani Enterprise has gone through a massive short covering from I think 1050, 1100 levels where the stock formed a bottom, the second bottom just about a few weeks back. From there, the stock has seen a reasonable amount of short covering. The open interest has dropped down significantly for Adani Enterprise. So that also indicates that the volatility should settle down for the stock price. So we'll wait out for maybe another couple of days till the time this volatility settles down. But if that also happens, then even Adani Enterprise could look very attractive.
Okay, that's the take coming in on the Adani group of names. But the pre-open rates, let's just revisit what they are settling in at, because it seems like it's going to be a mildly soft start. At least that is what the pre-open rates are indicating. But yes, sure enough, a fair amount of stability, considering we're only about 16 points. That's as good as a flat start. So pretty much in line with what the SGX Nifty was suggesting earlier today. But let's check in on some of the mid-cap trading ideas. Naresh, what's on your list?
So looking at Balrampur Chini, this is a stock which gave the first indications of a breakout after that spike last week. And going forward, 380 to 400 becomes a range to accumulate. And eventually, I would expect it to break out over the 410 mark, 410, 420, which is a resistance for the last 6 to 8 months. Strong base made sugar spot prices making a new move. So out here, expecting it to cross towards 450 in the short to medium term. So an accumulate on this one with a stop loss at 375.
Right. Kunal, what about your mid-cap ideas?
So I'll go with the stock which I've been recommending earlier, Bector Foods. That's a stock which has done exceptionally well, breaking past about the all-time high, or rather the 52-week high levels on a day like Friday, looking quite strong. Volumes making a comeback. I think it was one of the second best volume day for the stock in the last 1.5 to 2 months. So that also indicates that momentum is with the stock as well as a lot of trading participation. So would suggest a buy. 600 remains to be an immediate target. Stop loss at 544.
Okay, time to get in a khabar as well, and let's shift focus. Sources are indicating that Blackstone will be selling its entire stake of 20.5% in Sona BLW Precision Forgings. Pankaj is here with all the details of this stake sale. Pankaj?
So, Aisha, Sona Comstar will definitely be in focus today, and one of the key reasons is that Blackstone, which is one of the pre-IPO or one of the co-promoter sort of an investor, is looking to offload the stake in the company. They have opened a book via JM Financial being the banker for 20.5% stake, which is about 119 million shares, and that's almost the total holding that they have. So it's a big deal. 20% of equity changing hands is a very big thing if and when it goes through. The base price that they have offers it is 400 rupees. I think the current pre-open market price is close to about 415, 416. What I'm also picking up from my sources is that the demand is decent. It's not particularly very great. Don't forget, for a stock 20%, which is 5,000 crores in terms of absolute amount, to get a double X or a triple X in terms of demand is very, very difficult. So it's a decent book is what I'm picking up, and most likely the deal should go through once the market opens.
Oh yeah, indeed, and the stock has already started off sharply lower considering the price at which, the sellout was supposed to happen. That was much lower than the CMP at 400 rupees per share. 415 is where the stock has kick-started trade. But let's tell you what else is happening outside the world of markets, and protesters have gathered in Israel's Tel Aviv to voice their concerns against the judicial reforms in the country. The said reforms fear to threaten democracy in the country, and hundreds of Israeli women's rights activists dressed as characters in the popular television series The Handmaid's Tale marched to the center of the city to protest against plans by PM Netanyahu's government. Also, South Korea and the United States kicked off their largest joint military exercise in 5 years on Monday after nuclear-armed Pyongyang warned such drills could be seen as declaration of war. And China has named Li Kang as a close confidant of Xi Jinping as the country's next premier, placing him nominally in charge of the world's second largest economy. Li was nominated by the president Xi Jinping and appointed to the position with no dissenting voices at Saturday morning's session of the National People's Congress. And also, the IMD has gone ahead and declared a heat wave in Maharashtra's Mumbai and Thane districts. Most of the regions in the state are likely to witness extremely dry weather, which, by the way, they already are. Meanwhile, the weather department has also flagged off heat wave conditions likely to occur in isolated pockets over northern Konkan region. Back home, Mumbai recorded yet another day of record temperature, soaring at a whopping 39.4 degrees Celsius, wherein the maximum temperatures so far. Also, Virat Kohli finished his marathon innings at 186 runs, narrowly missing out his 8th double century. India finished their innings at 571 for 9, I beg your pardon, establishing a lead of 91 runs against the baggy greens. In fact, India will be looking to win this match and the series 3-1 series in order to qualify for the World Test Championship final. And a big day for India at the Oscars that are currently underway in LA. In fact, The Elephant Whisperer has bagged an Oscar for the Best Documentary Short. Meanwhile, Natu Natu from RRR has bagged the Oscar for the Best Original Song. And the Oscar for the Best International Film went to All Quiet on the Western Front. Everything, Everywhere, All at Once wins big with 7 Academy Awards.
I'm going to mark Ambuja Cements in the pre-open session because there was a global media report which indicated that Adanis are looking at selling stake in Ambuja Cement. They could be selling stake in Ambuja Cement because they want to reduce the leverage now, and that could be pretty much in line with what they've done with other Adani group of companies. In fact, Ambuja Cement has not seen a fresh investments from Ajit Jain and from his scheme. So could this be the other one where he may want to invest going forward? This is something which we picked up from global media agencies. Second, where is Tech Mahindra and where is Infosys? Infosys has lost a star manager. It's Tech Mahindra's gain. So are markets reacting in that same vein? No. Infosys is down 7 rupees or just 7 rupees. And Tech Mahindra, whoa, is up 6%. So it's turning out to be the story of the Monday morning, so to speak. Then you want to also revisit some of the PSU stocks and PSU banks, especially because they bore the brunt of the intense selling. What happened in global financial markets? SBI is still down, BOB is not going anywhere. Now the good bit is that at least they are not looking, we will not be in for a gap down start. There is a 2.6 crore block deal in Yes Bank, and Yes Bank is now plunged to 14.4. This is pretty much the price at which the P investors had kicked in. 14.5 rupees, that was the price of Yes Bank. So Yes Bank from the high is down about 40%, Kunal? I mean, it went to 22 rupees, right? 22 has become 14.5. Yes. So 22 becoming 14.5. You know, sometimes it's good to do live maths. Yes, 1 by 3. Yeah, it's more than 30%. Yeah. So more than 30%. Oh, what do you make of the charts?
Well, I have not tracked the charts frankly for Yes Bank. I don't believe that
it's liquid.
Yeah, there are so many liquid stocks, but then you don't invest in all of them. But so I
Or
frankly,
Idea.
Vodafone Idea is the most liquid name.
No, there is Yes Bank, Idea, and I would say Suzlon.
Yeah,
these are 3 stocks which are the 3 stocks which in a sense have been the heroes. Suresh, which is the liquid name you track? Yes Bank, Idea, or Suzlon?
So I track them closely. I don't trade them. So in between, when the stock had spiked up to 2024, I actually posted that the fact the stock is overdone. And say if you were to calculate it, it was almost at 80% of the market cap where it was pre the whole fiasco. So on a diluted basis, almost it was at 90%. So this is normalization. The stock is back today. So same is the case with Idea and Suzlon. The trends remain terrible. But one should be very, very careful even when you're playing an upward breakout. So the stock went from 18 to 24, which could have been a trade, which was avoided purely for this fact. Say the number of shares are crazy. The The liquidity is crazy. It's one of the largest, say, you have almost 48-50 lakh shareholders in Yes Bank. So that's the crazy part.
Vodafone Idea is down 90% in last 5 years, and that's what competition can do. It comes in Reliance Jio and it destroys the franchise value completely. And by the way, in this company now, government is also a part owner. So it's not going to go belly up. The AGR issues have been settled. So the survival is no longer a challenge. But the problem is that they've not invested in technology because they don't have cash. They have a voice business which is losing its sheen, and they've not really managed to migrate up the data value chain despite some attempts and reattempts to launch the service, to launch the brand, to launch the entire campaign again. It is just not having an impact on the business per se. 6.5 rupees for Vodafone Idea, and I will urge our viewers that do not buy some of the stocks just because they've fallen down 90%. Another one which we've not discussed is Tata Tele, TTML. It was like this most powerful poster boy which went from some 7-8 rupees to about 200 rupees plus. Let's look at TTML from 2020, January 2020, from the COVID low to COVID high, and from the COVID high to what kind of plunge it has seen. There you go. I mean, I have never seen such an amazing thing. It was
from 64
no 2021.
thereabouts.
You want to look at 2020, Asha. The graph will even look different if you look at from 2020. Why is that?
It was at 1.8 rupees.
Yeah, that's what I'm saying. It was sub 10 rupees.
Yeah, 1.8.
From sub 10 rupees, it went to some 300 rupees.
290, correct.
And 300 rupees comes down to 55 rupees. What's going on here? Don't track it.
No, don't track it.
Naresh?
Yeah, it was 200 plus and it's shrunk to 62 now.
Yes.
Yeah, 290 is what I remember
Yeah.
saying. Okay, we'll talk about some of these crazy moves in some of these crazy stocks and why they've happened after the Tata Group company. But we've always warned our views on Tata Tele. I distinctly remember saying that look, it never made sense that why the stock went higher. So I'm not surprised at all with that kind of info. 11 seconds to go. We are in for a stable Monday, and I think the word stable is the operative word here. Not as scary after a painful Friday. It could be a stable Monday, and I think frankly, if you're in for a stable week per se, the bulls should be mighty excited. First rates will just start coming up on your screen. We are starting with the green on the screen. 66 points up for the Nifty, flat start for the Bank Nifty, a mild markdown for the small cap index and a mild markdown for the mid cap index. The market breadth I think is looking decent, but the real hero today I think is Tech Mahindra. They've got a new CEO now, and could there be a change of fortunes for Tech Mahindra and the fortunes of Tech Mahindra? Adani Enterprises, Hindalco, JSW Steel, ICICI Bank, Apollo Hospitals, Adani Ports. Some names where news is not that important, but the price action seems to be constructive. Let's now look at banks, and especially PSU banks, which really got knocked out. And then Mr. Katpalia has got a 2-year extension, not a 3-year extension. I'm sure it will have an impact on the stock price of IndusInd Bank. Without even guessing, I can tell you. There you go, thought as much. Now markets are saying why 2, why not 3? 3 was better than 2. Is that something we don't know? But these things happen, guys. I mean, Federal Bank and a lot of other bankers have got extensions, which are sometimes 1 year, and then they've got extended. So I don't think you should read too much into it, but markets are markets. Markets knew this extension was coming. It's turning out to be a case of buy the rumor and sell the news for IndusInd Bank.
Yeah. The Adani group of stocks as well, considering they fully prepaid that $2.15 billion share-backed financing ahead of the deadline. You're seeing Adani Enterprises jump up almost about 3%, Ports holding higher, Adani Power is looking up by about 5%. I want to see what Ambuja etc. as well are up to, because it seems that the promoter has repaid $500 million facility taken for company's acquisition financing as well. That's Ambuja Cement that I'm talking about, 2.25% higher for Ambuja as well, currently in trade. Lupin, the US FDA has completed the inspection of the Vizag facility with no observations. So this would definitely bring a fair amount of relief. Stock holding up 1% as we speak right now. There's HAL. They've signed a 667 crore rupee contract to supply 6 Dornier 228 aircraft to Indian Air Force. I want to see what Sona BLW is up to. It's a sizable chunk. Blackstone is looking to sell their entire 20.5% stake in the company via block deal, which is going to happen around the 400 rupees per share mark, as we understand. 410 is where the stock is, down sharply about 6% as we speak right now. What is Infi up to? You know, Tech Mahindra's gain is also Infi's loss. So let's see what Infi is up to currently in trade. Absolutely flat right now. Well, clearly the big star performer today is Tech Mahindra. Nazara Technologies too, wherein the two subsidiaries hold cash balances at SVB or Silicon Valley Bank. That has, gapped down 3.6% lower. And then Mahindra CIE, wherein M&M was looking to sell that 4.6% stake in the company. That I think has happened, 7.5% lower for Mahindra CIE as we speak right now. But that said, it's pretty much in line with what the SGX Nifty, or for that matter, some of the select Asian market recovery has been. To be able to even see green on the screen itself is, I think, remarkable, and we are well above that 17,450 mark, 17,478 on the Nifty spot as we speak right now, and futures are currently skirting around that 17,500 level. Kunal, not bad. Who would have thought when we went home on Friday that we'll see a recovery on Monday?
Well, absolutely. I think
Kunal thought. He said that if 17,300 is intact, he'll buy on Monday.
Thank you, Nikich, for that. But
did you buy is important. That's so.
Today I'm buying.
Yeah.
Today I'm buying.
So, today buy.
Yeah. On Friday we were very clear that we don't want to take a call just because the risk reward is attractive. You have to wait for that period of bounce. I think after today's move, it indicates that the market should stabilize, and the 17,300 is a good support. So the first stock which I would be looking to trade would be Cipla, more on a contra trade, just around that 880 odd mark. Looks very attractive. Purely from a risk reward, but as I said earlier, that I think it's a good time to now add on to more high beta as well as few large cap names as well.
Naresh, what is your first trade?
So accumulating, starting with a small position on Balrampur Chini again, expecting it to consolidate here before the breakout. So would actually want a little more dip here.